Hey everybody, it is the weekend and we're taking a look ahead to Monday, February 11th as we start to trade February week 3 for the S&P 500. So it's monthly OPEX week, so our Friday options have a morning expiration and an afternoon expiration. If you're new to trading S&P 500 options, I wrote a whole blog article about how that works and everything, and you can just check that out in the blog if you're new to this account and or new to trading S&P 500 options in general. Anyway, here is our 5-minute chart. Every day I move my simple moving averages around to where the daily chart tells me they are because they rise or fall as of the open each day. Unless they happen to be, running on a flat line the way our 200-day simple moving average is right now. And so this little blue price level in here that you really can't read the name of the price level, but you know that it's the 10-day simple moving average because it's this blue line that matches what's on my daily chart. And here's the 100-day. So this 10-day and this 100-day were the key players of what went on Thursday and Friday of this week. And that's what we're looking at here on the 5-minute chart. Here was Wednesday's close all the way up here. Here's our big gap down open on Thursday, 12-point gap, and then just a complete flush out down to a low at 26.87, and then a slow and steady attempt to climb back as the day went on. During the day, on Thursday, the 10-day simple moving average was probably a little lower, like down here. And so you can see that this was quite a bit of chopping back and forth that was going on. And then finally it was regained at the very end of the day around 3:30, and there was a push to make it back above the 100-day. The 100-day, this is where it was as of the close on Friday, but on Thursday it was a couple of points higher. It was up here at this 2704 level, equal to where the January close was. So there was this effort right in the last few seconds, you can see, to close above that 100-day. And as I've gone over many times on many videos now, the 100-day simple moving average was the quintessential rejection point throughout Q4. Every single rally came up to the 100-day and rejected it and fell back. The top of every bounce that we tried to make after the October low, the highest bounce came right to the 100-day. The November and the December came right to or within a few points of, below the 100-day and rejected. And now that we have been trading above the 100-day, there are these efforts that are made, even if it takes till the very end of the day, to get us back above it. And then here's Friday. We gapped down open once again and flushed down and made an even lower low. But still, once again, they really couldn't push us down below the 2680s. Got down to a low of 2682, 78, 2682.78 on Friday. So we're playing the 80 handle rule game, right? We come from 2700, we reject it, and we fall back to 2680, and it's being bought. And now we're looking back at 2700 again. And here at the end of the day, you can see in the final 5 minutes, we really made this assault on the 2700 level and closed and put in all this advance literally in the last 5-minute candle. So that took back the 100-day, and that took back the previous Friday's close, so that on the weekly chart we would have a little bit higher close. So what does this mean for Monday? Well, either it means that people did actually buy this and we're going to rally on Monday and we're going to go after this gap up here, in which case if we get up to 27.19, obviously if you load it up on puts, I know I bought puts and I hedged puts and then I bought some more puts. So I have sort of, I have this long, short, long kind of thing going on with February monthly puts that I bought on Friday. But I know that if we get up to 27.19, I'm either going to have to get rid of that top long put that's on the stack, my stack of stuff that I have, or sell something short against it to sort of neutralize it out. But above 27.19 short is going to be the wrong way to be in this, because you saw what they did here with this gap, and that means they're going to do the same thing with this gap. And they're going to go after this 27.31 close on Wednesday, and so on and so forth. So let's go to the daily chart and take a look at that. So here is Thursday and Friday, seeing it in daily time frame. And if we're going to be bullish on Monday, You want to see 27.19 go down, fill this gap, get past the 200-day simple moving average, and advance on from there. If we do make any kind of a higher high above the one that was made last week, that still remains as our 2019 high and closing high that same day, we need to make sure that if we do make a higher high, even if it's just a couple of points over this 27.38.98 level, you have to come back that same day and make a higher closing high as well. Otherwise, it's a good chance that we will sell off at least 1% or so the next day. And I just wrote a new blog article about that in January. It's the first new blog article that I had written in months, and it was a really important point, and it's been very helpful because you can see that the next day we didn't make a higher high and we didn't make a higher closing high either, and then we wound up gapping down open after that. And we have since sold off definitely more than 1%. We've probably sold off, what, like 3% or something like that at this point from our high that we made last week. Okay, so that's the upside, and I'll go over some more stuff on the upside when we get to the next chart. But on the downside, I put this little measured move idea in here last week. This is taking our high that we've made for 2019 to the top of this candle for the day that we had the last Fed meeting. And if we take that range from the top of this, from this high up to this high that we've made here, if we were to take that and double it back down again, it was real interesting, and it aligned perfectly with filling this little gap that was left here, this little tiny gap that we left here on the 29th, the day before we went into that Fed meeting. So I thought that was a real interesting measured move, and I really think that if we're going to head a little lower, that's what we're going to go after. And if that isn't enough to feed the beast, then obviously we're going after a test of the 50-day simple moving average. Now, the 50-day simple moving average was taken out back here in the first place on January 17th with an intraday piece of news that was dropped regarding trade. It was that day that the news came out in the middle of the day that Trump instructed his team to write up a proposal that they would trim back the tariffs or delay raising the tariffs or whatever it was. So market popped on that, and then it came out later that it was fake news, but in any case, the market went ahead and gapped up open again the next day anyhow, and so on and so forth. But it was all involved around this 50-day simple moving average, because the day before we had come right up to it and rejected, and I remember trading this day, and I had a short bias, but as we got up to the 50-day, just in case, I went ahead and I bought a call, and then literally like 10 minutes later, that news dropped. And I was so glad that I had that call because it appreciated so quickly that it really drowned out the damage I was taking on for being short bias that day coming in and going to this 50-day. So anyway, let me circle back around to the point of why I'm bringing this up. If it was trade-induced news that got us through this 50-day and trade-induced bad news, with the fact that the news was out that Trump is probably not going to be meeting with Xi on March 1st after all, that's what seems to be pushing us down. Why wouldn't it bring us right back to the scene of the crime, so to speak, where we first broke out in the first place? And this 50-day simple moving average was falling at the time that we broke through it over here, and now it's rising again. In a couple more days, it's going to rise up, and it's going to literally be exactly where it was when we took it out in the first place. So it makes a lot of sense to my mind that that's where we are headed if we continue to the downside, long story short. Okay, so let's wrap this baby up, okay? If we are going to break out and see further upside, it all starts with taking out this gap, making a higher high, and making sure if we make a higher high that day we also make a higher closing high. We're going to take out the 50-day simple moving average, and really, there's nothing to do for 20 points above 27.42 and the 200-day simple moving average till we get to 27.60 to 27.63, and above there's yet another big air pocket that would take us all the way to this gap up here at 27.90. Of course, we could look above the 50-day and completely fail at the 27.50s. Or we could, go on through to this 27.60 to 27.63 and rest and fail there and wait and come back and test some more. It doesn't necessarily mean that once we get through the 200-day, we're just going to keep going higher and higher. But know that these are your stopping points. places where things might, you know, stop being such an easy directional with calls. Okay. And then on the downside, if we're going to come in, if we're going to come into Monday and start heading down, it's all going to start with breaking this 100 and this 10-day simple moving average again. Those are your key points that mark your success or failure as far as if you're long or short for the day coming in, or deciding on your position after the open. Really, you probably should keep a long bias above the 100-day, and you could be short to neutral below the 100-day, and you definitely want to be short bias below the 10-day. That's my opinion. That's the way I look at it. And if we're going to continue lower, we have this measured move target that would take us all the way through and rhyme very well with filling a gap to 2640. On the way there, we might get caught up on the 20-day simple moving average, which is down at the 2660s. So it's kind of interesting that on the downside, we have the 2660s coming our way, and on the upside, the 2760s. So our 20-day simple moving average, and then finally culminating in maybe filling this gap and making this measured move target. And if that fails, you know, to hold, then we go after our 50-day simple moving average, which will be rising up into a spot where it was back when we first took it out in January. By the time we get to it, if it takes a couple of days, if it's one of those hideous, if we have some kind of like hideous sell-off on Monday, we could easily, you know, get down here, you know, in a day and a half or something like that. But if it takes a couple of days, this 50 days is going to be rising, and it's going to be right around this 26 level, which is where it was when we took it out back here in January. All right, I hope that all made sense and wasn't too boring. I'm going to have a glass of wine now and enjoy the rest of my pathetic Saturday night. Have a good rest of your weekend. And I'll see you tomorrow, Sunday, when the futures open. Good luck and good trading.